as an investor at this point in time, it is very hard for us to ignore growth investing, right? In fact, we should be a part of growth investing at this point in time.
So I guess for our listeners today, they're probably wondering, after you describe both, which one is more suitable for me? Which one should I go for? Which one should I start with?
So first and foremost, I would say there is no one size that fits all. Whether you choose to be value investor or growth investors really depends. However, I would just like to look a little bit at the history. There is no doubt if we look back at the past 50 years or the past century even, that value investing is the place to be. It's outperformed many of the other strategies out there. However, if we zoom into the last decade, since let's say 2008, 2009 financial crisis, right? Growth investing has certainly outperformed value investing, not just by a little bit, but by a lot. By a lot. If we look at the performance of Berkshire Hathaway, the company of Warren Buffett's company, right? Warren Buffett's company has underperformed versus the S&P 500 index. It has even underperformed so much more as compared to the Nasdaq 100, which consists of mainly technology and high growth companies. The vast underperformance lead to today the surging popularity of growth investing. On top of that, the current market situation right now, the vast technological advancements at high speed, technologies such as 5G, artificial intelligence, cloud computing, this will spur the way for future technological advancement on many types of applications. And this is why companies that are involved in this industry or in these segments, they are showing such strong growth because they are going to change the future. So as an investor, at this point in time, it is very hard for us to ignore growth investing, right? In fact, we should be a part of growth investing at this point in time. However, I would also like to qualify that besides the recent outperformance of growth investing, you should also look at a few other factors that are personal before we decide as well. First and foremost, our propensity towards passive versus active investing. If you are the type that like to buy and close your eyes and hope that 10 years later your stock will have appreciated a lot, that means a very passive buy and hold strategy, then probably value investing is more suitable to you. Growth investing or growth investors need to be more active in managing their portfolio because we are dealing with companies that are high growth and tend to be more volatile. Another factor to consider would be our ability to tolerate the volatility, or also maybe our age, because as we grow older, we may favor those companies that are more slow and steady and stable, right? If we are younger, we should be able to tolerate more volatility. For instance, a value investing portfolio, that means portfolio consists of value companies, right, may grow at a very steady pace of 7 to 10% per annum. But a growth investing portfolio may grow 20% one year, down 15% next year, and then grow 30% next year. So these are the type of volatility that you must be comfortable to live with. Another factor that I think we should consider is the holding period. Value investors tend to buy and hold forever, for as long as it takes, right? Warren Buffett has his favorite time frame is forever. They look at a stock as ownership rather than just a participant in the share market, right? Growth investors cannot afford to fall madly deeply in love with any particular stock, right? We should get out when the growth story is no longer valid. Remember, we are buying at a premium. Growth investors buy at a premium. When the growth story ends or when the market turns sour, right, there is a long way down because we are buying at such a high price. So we should be actively managing to get out when the price turns. In fact, what we teach here at Beyond Insight is that we combine the usage of technical chart to better time our entry and exit so that we know when to exit when the market or the company turns.